All right, we'll go ahead and get started. Thank you, everybody, for joining us for April's Community Impact Briefing Call. We're really excited to have a pretty rock solid lineup for a panel today. Um, my name is Jordan Backstrom. Just going to go over some quick housekeeping things before I kick it over to the other folks on the call here. But as always, this call will be recorded. All webinars are posted on NCST's website, and I'm putting that link in the chat. Additionally, we'll post that for everybody there. Those video links will be there. We're going to have a panel discussion today. At the end, we will have time for questions from you all. There's a Q&A and chat feature at the bottom of your Zoom window. Feel free to type those questions in as we go. We'll monitor those and get to them there in our Q&A portion. Additionally, if there are any questions that you don't get to today, or if you want to reach out to us about anything else, please feel free to reach out to us at info@ncst.org. I'm going to put that email in the chat as well. Feel free to reach out to us anytime, and we can forward your email to whoever the correct contact is. So feel free to reach out to us on that. With that, I'm going to turn it over to my colleague, Emmy, who will get us introduced to our panelists today. Thank you.
Thank you, Jordan. Good afternoon, everyone. My name is Emmy McClintock, and I'm one of the policy managers here at NCST. Thank you so much for joining this month's briefing. We're very excited to have you. This panel that we have here today convenes at a pivotal moment for federal housing policy, one defined by both urgency and opportunity. Across the country, communities are grappling with persistent mismatch between housing supply and demand, rising costs that continue to outpace incomes, and long-standing inequities to access stable and affordable homeownership. Against this backdrop, the Senate's passage of the 21st Century Road to Housing Act represents one of the most ambitious bipartisan efforts in recent years to respond to these challenges in a comprehensive way. By weaving together elements from both the House and Senate proposals, this legislation signals a meaningful shift toward consensus, particularly around the need to increase housing production at all levels, reduce regulatory and financing barriers that constrain development, and modernize federal housing programs to better reflect today's market realities. Provisions aimed at streamlining construction, supporting manufactured and modular housing, and expanding pathways to homeownership suggest a broader recognition that no single solution will work to close this housing gap. Instead, it will take a coordinated, multi-sector approach that engages federal, state, and local practitioners alike. At the same time, with any other major piece of legislation, important questions do still remain. Differences between the House and Senate versions underscore ongoing debates about how best to target resources, balance supply side and demand side strategies, and ensure that investments reach the communities most in need. There are also critical considerations around implementation, how these policies will translate on the ground, how success will be measured, and where gaps may still persist, especially for historically underserved communities. Today's forum is an opportunity to unpack not just what is in this bill, but what it means in practice for practitioners, policymakers, and the communities they serve. We'll explore the origins and the evolution of the legislation, examine its key provisions and potential impacts, and consider where there may be opportunities to strengthen and refine federal housing policy moving forward. And with that, I'm happy to introduce today's panel. Our moderator will be Sarah Edelman, NCST's Executive Vice President. We're also joined by Chloe Granger, Director of Policy and Advocacy at the National NeighborWorks Association, Grant Beck, Vice President of Strategic Partnerships for Next Step Network, and Dan Hardcastle, Founder and CEO of Build Trust. Again, thank you all for being here for what is sure to be a timely and informative conversation. And with that, I'll kick it over to you, Sarah.
Thank you so much, Emmy. And thank you, Grant, Dan, and Chloe for being here. Chloe, let's kick it off with you. To start out, how did this legislation has gone through so many twists and turns. Many of the folks on this call have been spared the twists and turns. They're not watching every piece of this, but how did we get where we are today? And sort of how are these parallel efforts converging or not converging?
Yeah, thank you, Sarah. It certainly has been what feels like a long saga with lots of starts and and exciting moments and disappointments, but we're certainly at a very important stage right now. So I guess I figured to go back, I would maybe start with just last Congress. So I looked at the Senate. Chairman Scott had his initial version of the Road to Housing Act, which was really a priority, mostly Chairman Scott and Republican priorities in a much more narrow, but still, relatively expansive housing package. But once, the majority changed over, and he had the gavel, and Ranking Member Warren was new to the committee. We really saw it come together last summer with kind of what I remember at the time being a surprise at how expansive and how bipartisan the package ended up being. So it was really gathering a bunch of priorities, building off some of Chairman Scott's original ideas, a lot of Ranking Member Warren's priorities, and also priorities from each of the members of the Senate Banking Committee. We saw that package kind of emerge quickly and then pass unanimously out of the Senate Banking Committee in July. And then eventually, it did pass the full Senate technically as an amendment to the National Defense Authorization Act at the end of the year, but it was sort of, I wouldn't want to say snuck in there, but that was, kind of where that happened last year on the Senate side. Looking over to the House, in some ways it has been a parallel effort on the House side. They got a little bit of a later start. So it really started with the subcommittee chairman of the House and Housing and Insurance Subcommittee on the House Financial Service Committee, Chairman Flood, and Ranking Member Cleaver of that subcommittee really partnered to focus on reforming the Home Investment Partnerships Program, had a very sort of robust, I would say, input kind of effort from practitioners and stakeholders to put together a bill to reform the home program. I would say their efforts were slowed by the government shutdown and when the House went out of session for, I think, a record amount of time, a couple months. So they ended up kind of finding themselves probably further behind the Senate than they certainly wanted to as far as putting together a housing package. And so, we saw them introduce that home reform bill in the late fall. And that was really kind of the centerpiece for which they ultimately structured their package around. And so what we really saw was when that Road to Housing Act had actually passed the Senate in the NDAA, the negotiations with the House began to occur as far as would they take that, would they agree to ultimately pass the Senate's Road to Housing Act. Chairman Hill felt like the House had something to say and hadn't had a chance to do so. And so really ended up rejecting that opportunity to pass the Senate's Road to Housing Act at that time. And they put together their housing package, which ended up being called the Housing for the 21st Century Act. And that passed almost unanimously out of the House Financial Services Committee in December. And then we actually saw them pass it with a very strong bipartisan vote on the House floor in February. And this package, again, I would say from my perspective, centered around the home reform, but a lot of other provisions in that bill as well. I would say in general, maybe not quite as expansive as the Senate package, but also, a lot of overlap between those packages as well, as far as many provisions being in both. And then, that brings us a little closer to now. The Senate decided to move forward with, instead of just passing on the floor their original Road to Housing package, they sort of combined the House package with the Senate package, and now we've got the 21st Century Road to Housing Act. It sounded like it was a compromise, and in many ways they did incorporate a lot of what was in the House package, but they did not actually really involve the House in that negotiation process. It was really done with the White House. and they were able to get the White House's, full support on that package. And ultimately, they passed it on the Senate floor shortly. I guess that was, I think, end of February, beginning of March, mid-March. I'm having trouble with my time right now, but and so, I think the assumption there was that they would see with the administration's support, as we've sort of seen in this Congress, I think the calculation was that President Trump would help kind of push the House, which had been reluctant to take the Senate's product. But we have not seen that happen. And so we've been at a bit of a standstill. I think it's a little different than we sometimes see. This isn't exactly a partisan fight. This is a fight between the House and the Senate, although I think we do see that plenty. So, there is a urgency here for them to come to an agreement, but we're not there yet. Right now, they're sort of volleying back and forth. There was just some reporting yesterday that it looks like the House may amend what the Senate amended, and kind of send the package back with some changes from the House, and that might happen in the coming weeks. So hopefully that wasn't too long, and hopefully you all stayed with me. But I think that's just sort of, I guess, where we are right now. News breaking on it almost, by the week.
Thank you so much, Chloe. It's hard to believe that all of that has happened in the last year. Sticking with you for a moment, so you laid out the context here, but we know that in our communities, practitioners, especially NeighborWorks practitioners, are often doing the work to make affordable home ownership possible. What's in this bill for these practitioners that expands their capacity?
Yeah, I think there's a lot. So a piece I'll focus on first that I don't think is getting a lot of attention is some reforms to the HUD's housing counseling program. So it's really kind of presented in the bill as sort of accountability reforms, additional regulations, maybe to address underperforming housing counselors. The way at NNA we see that is it's largely just sort of clarifying and maybe slightly strengthening kind of accountability and regulation that already exists, especially compared to where we were at when kind of the first version of Road came out, where it was a lot more punitive. But I think a really important piece that is not widely known, I think, is there is a funding stream for housing counseling, specifically for delinquency counseling, which would be fair market reimbursement for delinquency counseling for FHA, USDA, VA mortgages, and it'd be paid for through the Mutual Mortgage Insurance Fund. And so this is, actually I think a very big deal for housing counseling, and would be, a really important step as far as getting housing counselors fairly reimbursed for counseling, especially the, foreclosure prevention that can be so costly. So I think, certainly that's a demand side intervention, but a very important one that hasn't gotten a lot of attention. There's some environmental review relief that I think will have, definitely important impacts to make it easier to build single family and multifamily homes. Home reform, which I already talked about, and I know we're going to touch on later, so I won't dive too deeply into that. And then I think lastly, something that we've been focused on at NNA is the Whole Home Repairs Act is a provision that was included in the Senate package, not in the House package. And this would establish a pilot program at HUD to create basically a program for grants and forgivable loans for holistic home repair. I think those that are involved with home repair, aging in place programs know how difficult the different funding streams, the conflicting requirements and eligibility, the need often, like with home, to get the whole home up to code, which kind of often precludes folks from using home for that purpose. So kind of it's based on a Pennsylvania program to set up a one-stop shop for localities that would be often run by nonprofits practitioners to really run home repair programs that can address a variety of needs in the community and really preserve that homeownership stock that we're seeing, we're losing too quickly. And actually, I'll just do a quick plug and I'll put it in the chat. NNA is actually leading a letter supporting that provision. And the deadline is next week, Tuesday, to sign on. And I'll put that in the chat for folks that might be interested in supporting that. I think it's important, especially these provisions that are not in both bills, to really like lift up those provisions to make sure that ultimately they're included in the final package. And so there's a few efforts around provisions like that, and we're working on the whole homes provision on our end. So I'll put that in the chat and would be happy to take any questions from folks about that.
Great, thanks so much. And so the Whole Home Repair Act is part of the bill that passed through the Senate, but was not in the
Senate
House bill.
Right.
That's great. Thank you for sharing that. We're going to pivot over here to Grant. Grant, there's a lot in this bill for manufactured housing that is, I think many of us are happy to see because we know manufactured housing is part of the affordable supply solution. Can you tell us a little bit about what is meaningful in this bill for manufactured housing?
Yeah, absolutely. And thanks for having me today. And, to your point, it is a lot. So I'll try to be, kind of as succinct as possible. So Title III of the legislation is really focused on provisions for off-site construction. And quick point of clarification, a lot of the provisions within Title III are focused on manufactured homes, which are built to a federal building code known as the HUD code that was established in 1976. So Section 301, which is the first section of this, which was included in both the House and the Senate versions of this housing package, and is currently in the past Senate version, would make an important update to the HUD code. So all manufactured homes are required to be constructed on a permanent chassis that remains with the home indefinitely, even after being sited on a permanent foundation.
Grant, what is a chassis? Just so
yeah, sure thing. Yes. Which I'm just getting into now.
Okay, good. Okay, all right,
So basically, this is a multi-ton steel chassis that is integral to the construction of the home while it's inside of a home building facility, and also during the transportation of the home to the final address. Because remember, these homes are being constructed off-site, put onto a flatbed truck, and ultimately shipped to its final destination. And so with this change, homes that are placed on a permanently engineered foundation, we will be allowed to essentially recycle that chassis back to the home building facility, as opposed to it being a dead cost that lives under the home for the entirety of the life of that home. And there are several kind of key benefits to the ability to do this, and the first of which is cost savings. So estimates show that depending on the size of the home, removing and recycling that steel chassis back to the home building facility can save anywhere from $4,000 to $13,000 on a home's construction cost. This also creates greater design flexibility and new opportunities for things like urban infill and small lot subdivisions and multi-story designs, while maintaining the safety and quality standards overseen by the federal HUD code. It also allows for homes to be set closer to the ground on permanent foundations, which improves aesthetic and curb appeal, which is a really important factor for mortgage lenders in particular, considering the opportunity to be more active in this market. There's also a sustainability piece to this, as essentially you are taking that 4-ton steel chassis and recycling it back to the home building facility for a new home to be built on top of. Other provisions that deal with manufactured housing include sections 302 and 303, which focus primarily on home financing. 302 would essentially direct HUD to review FHA's construction financing programs to identify barriers for developers using manufactured and modular homes. They would look at things like draw schedule for construction financing, which is structured differently than more traditional site-built development. And this is going to be critically important for small and nonprofit developers interested in leveraging manufactured homes as part of their strategy to address housing needs. And Section 303 increases the loan limits for manufactured home loans insured by FHA, and there are also implications for ADUs in that section as well. And then finally, Section 304 authorizes HUD's Preservation and Reinvestment Initiative for Community Enhancement Program, or PRICE, which is obviously much simpler, to provide competitive grants to help stabilize both manufactured homes and manufactured housing communities. So in the first year of funding for this program, HUD allocated $225 million that was awarded to 17 grantees across 26 states. It's worth noting that HUD received more than $3 billion in funding requests, which I think really shows the tremendous need and desire for folks to take advantage of this pool of funding. And so these funds can be used for critical infrastructure and infill work in manufactured housing communities, many of which are rapidly aging and in poor condition. And they can also be used for replacement of pre-1976 mobile homes, both in communities and on privately owned land. Because these homes predate the federal HUD code, they are often in a state beyond repair and weatherization measures. So they really need to be demolished and replaced with a new unit. And this is especially challenging work given the disproportionate number of folks who live on fixed income who live in older mobile homes. So the PRICE program provides much needed infusion of subsidies to both preserve and create more affordable housing opportunities.
Great, thanks. And just in terms of what you were saying, the chassis part of the legislation is in both the bill that was passed by the Senate and the initial bill passed by the House.
That's correct, yes.
Price is in the version that is in what was passed by the Senate, but was not in the initial House bill.
Correct, yes.
Yeah, great, thank you. Shifting to you, Dan. Dan was I think provided really critical technical assistance as legislators were developing some of these changes around ADUs in the bill. And so, Dan, tell us a little bit about what these changes would mean.
Yeah, thanks, Sarah. I'm really glad to be here. So this is within Section 303 on the Senate bill side, and then there's some legislation in the House side, the Supply Act, that would make some similar changes around ADUs. But I'll focus on the Senate side today, since that's what's enacted, and that also includes some additional changes to HUD's Title I program, which is this really interesting. It's the oldest program at FHA. When folks talk about any other kind of FHA loan, they're talking about something that's under Title II, which, as the number suggests, came after Title I. So Title I, as it currently stands, does two things. It provides small, up to $25,000 second lien mortgages to homeowners for home repairs. That number has been stuck by statute since, I believe, 1992. And so as what $25,000 can buy you has diminished over the years, that piece of the program has shrunk accordingly. At this point, there are just kind of a handful of folks around the country who have some, in some cases, really interesting niche programs, like the folks in Pennsylvania who are using this for specifically, I think, sewer line replacements. But that's been stuck in that side. And then, as Grant mentioned, there's also this other side of Title I currently that provides personal property financing for manufactured housing. And so that side has had more flexibility on the loan limits regulatorily, but the changes in the bill here would expand the ability to index and just make that a more flexible program. So the thing that's newest here is the introduction of ADUs as an eligible use for Title I. And importantly, the ability for HUD to set loan limits specifically for those. So on the general property improvement side, the bill would raise the loan limit from $25,000 to $75,000, which again keeps pace with inflation, makes that just a much more useful program that I'm sure the practitioners on this call can appreciate what a flexible $75,000 a second lien effort would mean for so many homeowners. But then on the ADU side, it would allow HUD to set a new loan limit specifically for ADU construction. And that's something that, those of us who've been working in the ADU space for a long time really recognize that the need for a second lien product like that, especially in the current rate environment, that can allow homeowners to, tap into the value of their land and, all the things that ADUs can do, from generating rental income to providing housing for families, everything under the sun. While we were at FHA during the Biden administration, we were able to make some changes to our 203K program which is a first mortgage program that made it more flexible for ADUs, allowing things like future rental income to be included in underwriting, which is great and important. But again, with so many folks locked into their current mortgages, the need for a second lien program to come into play as well is really critical. And so this would be the first nationally available second lien ADU product. And, it would, again, really be something that I think with now 18 states and counting having adopted statewide ADU legalization at some level, this is kind of the necessary unlock to make sure that ADUs are something that are really meeting the needs of homeowners across the income spectrum.
Thank you. And one thing so as Dan was saying, this Title I program can be used for home repair as well, which I know is of interest to a lot of folks here on the line. And he touched on the loan limits, and I just want to underscore how important this is. Oftentimes, when Congress legislates, they include a dollar value loan limit, or for a program, and then Congress then needs to go back and change it. The program very quickly becomes out of date. And so the changes on the home repair side for this Title I program under this bill, it would raise the loan limit from 25,000 to 75,000, and importantly, allow for regular updating. So it may sound like a small thing, but it's actually allows the policy to stay meaningful over the longer term. So very much appreciate you sharing your perspective on that. I want to go back to one of the central pieces of these reform bills is around the Home Investment Partnership Program. Both there was, the effort was really, there was effort spearheaded in the House, as Chloe mentioned, by Chair Flood and Ranking Member Cleaver. A tremendous amount of input was shared. NCST is supportive of where that bill landed on the House side, and also very encouraged by what passed the Senate. Can folks, and I'm going to open this up to everybody, but maybe start with Chloe, talk a little bit about how this bill would make how these changes to the program would make it more usable for practitioners.
Yeah, absolutely. And I'll just to say, we did have these parallel bills, the Flood Cleaver bill and Senator Cortez Masto from Nevada had her for a while, this her home reauthorization and reform bill. And so there was really, I think over the course of this, we did see sort of a merging of these bills. There's still some difference as far as the home pieces in them, but a lot of those differences have sort of been, reconciled with some notable exceptions. So I'll just kind of lay that there. And so I think when looking at home ownership, I'll just say that was when Chairman Flood started this process, that was one of his key objectives, was to make home more usable for home ownership purposes. He didn't, like to see that, the falling kind of share of home used for home ownership. And so that was a major focus, certainly, of the chairman. And so I would say, a couple key pieces, maybe some of the biggest ones is a change in the eligible household for home ownership. So as we all know, probably home is targeted at 80% AMI or below for eligible households. But this bill would, and this changes in both Senate and House packages now, would increase that threshold just for home ownership to 100% of AMI. As we've seen in the current market for a lot of markets, it's very difficult sometimes to serve 80% and below AMI for home ownership. It just doesn't pencil out for both the developer, but also importantly, the household. So that's a key piece. Another is increasing, the purchase price limit from 90% of the area median purchase price, if I've got that terminology right, up to 110% again to make it more workable in the current market. I think there's been some improvements to resale requirements, and community land trust definition was, kind of improved and really codified. And so those are, I would say, kind of the, really key pieces for specifically targeted at homeownership in the home reform bill.
Great, thank you. Anything that Grant or Dan would like to add there? Okay, let's move on, and then we're nearing I think this will be the last couple of questions here, and then we'll open up for a Q&A. We know we're covering a lot of ground here and hope we can kind of dig in on a couple of things. So looking across the full package, what is not in here that you think is really important for addressing the nation's affordability challenges? We all know that I think all of us on this line are supportive of this effort and want to see Congress pass something as soon as possible. I think we all know that it is a start. It is a down payment on the full amount of policy making that we need to make a dent in the various housing challenges that we're facing. So what else should we be collectively looking at? Dan, let's start with you.
Yeah, so I think, if you look at some of the measures here that seek to, incentivize local action, I think this was something that we really grappled with a lot, during our time at HUD on, what is the optimal balance of carrots and sticks? How can you really, get localities to do the most of what works? And I think one thing that we kind of recognized, is that there's still a strong need to gather data on what works, on the interventions that are going to be most impactful for housing supply, that it's not that there necessarily is a laundry list approach. And, we know some things that are proving to be organically popular, like ADU legislation, that, like I mentioned, that's, we're up to 18 states now that have adopted some form of it without there being specific federal incentives there. But I think, the federal role can be to both amplify local ideas, but also, once we have best practices in mind and identified, to really kind of help folks steer in that direction. So I think that, opportunities to look at comprehensively what's been done, how organically driven, pro-housing reform efforts nationwide have progressed to date. What are the lessons to be learned from them that can be carried across to other states? I think really kind of that comprehensive, staged research angle where we're saying these are the interventions that we think are most effective, and here are the specific ways in which localities can bring them to life, as opposed to the more general, just, bring us your ideas and we'll toss you some funding. I think that there is really an opportunity, in the future and I think that could come, once this is passed, we can look at the efforts that were funded under this bill, if Lord willing it makes it through, and then say, okay, these are the ones that we actually saw produce the most impact. And so in the next iteration of housing reform, let's drill down and focus federal efforts on the approaches that really are delivering new homes.
Yeah. Yeah, and I would add, Sarah, just kind of building off of everything that Dan said, which I think is spot on. In particular, one of the biggest challenges that we face on the manufactured housing market, but certainly also expands beyond that, is looking at challenges around zoning and barriers to zoning to get more missing middle housing options, and particularly around manufactured and modular housing. And so, kind of seeing the role that the federal government can play, again, zoning is an inherently local issue, but looking at those carrots and stick opportunities and seeing how, best practices development and other ways that, HUD and other actors in the federal space can take a more proactive role in helping to ease and address some of the zoning barriers so that we can get more housing supply on the ground that folks can actually afford.
Great. Thank you, Grant. Chloe, anything you want to add?
Yeah, I would just add, I think all really great points. I think maybe the big piece I see often as missing is more general statement is given the political environment, we don't necessarily and who's in charge, we don't expect there to be a whole bunch
Mhm.
of funding
Mhm.
associated with this bill. So it's really largely a deregulatory bill trying to remove those barriers, reduce costs, make it easier, address zoning. But I think which is all very important and will reduce
Mhm.
costs and unlock more housing. But uh, asking especially practitioners on the ground to do more with when a lot of the programs they rely on are largely being flat funded, if not
Mhm.
worse, if not cut. And especially in this inflationary environment, I think that that's a major issue, especially when we're looking at, affordable, maybe capital A affordable housing,
Mhm.
particularly. And so, really looking to, more resources, whether that's through the appropriations process, where really I feel like we've been fighting really hard just to not lose ground on funding for these programs, and they're definitely down from kind of more historic highs in the past. And of course, I know I would be remiss, especially on a call with NCST, if I didn't bring up the Neighborhood Homes Investment Act,
Mhm.
which would be a very critical source of those resources for home ownership that doesn't really exist now, and also wouldn't rely on congressional appropriations. And obviously, it's not included in this bill. They're not really doing tax policy. It opens up a whole can of worms through this package. But I think there are still, especially neighborhood homes, and also just in general, more resources, especially, for example, the whole homes pilot. It's that would be enacted. It's relatively small, but the idea is eventually when you with proof of concept, you can resource those types of programs more. So that would probably be the next step, hopefully, with maybe a different political environment or market or something like that.
Thank you so much, and thank you for the plug for neighborhood homes. I couldn't agree more. Um, we're going to open up for a little question session. There's already one in the chat, which is around what do these bills do for community land trusts? I think it really goes back to. I think that the Chloe's earlier comments around the home program, I think that's where you probably saw the biggest changes that will benefit community land trusts that sort of dispel any confusion around whether you can use home funds for community land trusts. I think they've really gone a long way to make sure community land trusts are squarely within are basically encouraged to be used for home funds. Anything else you want to hit on, Chloe,
Think,
related to
yeah,
CLTs?
I mean, I think you pretty much covered it. I think maybe a very important piece would be codifying the preemptive purchase option for
Hmm.
community land trust, which I think has really was a little bit was done through appropriations bills, was not as baked into the program. And so I think, of course,
Hmm.
that's really an important piece. And so that's a part of it, but that's part of that sort of really building community land trusts, particularly when it comes to the program, home program, into the design of the program.
Great. Any other questions? Okay. Can you please discuss the 7-year disposal requirement added by the Senate in an attempt to limit institutional housing ownership? I understand that might see opposition in the House. Brenda, you've definitely hit on one of the squirrelier parts of the bill that has generated quite a bit of differences of opinion in the final stretch here. Section 901. Section 901 of the bill tries to kind of implement the president's executive order that was published in January, that was a ban on institutional investors purchasing single-family homes. And so the provision was being worked on between it was a standalone bill that was being worked on by Senators Moreno, I understand Warnock with the White House, it made its way into the 21st Century Road to Housing Act. The president had said he would not sign a housing bill unless institutional investors were dealt with in some way. And it's the 7 years. So basically, the way this provision works, it prohibits institutional investors, and that's defined as an entity that has over 350 single family rental units under management, prohibits them from buying single family homes. Then there are a number of exemptions, and many of the ways in which investors currently buy homes are exempted from the ban. And then throughout this sort of sausage making, then there was I think to balance that out, a 7-year divestment requirement added so that if you are an institutional investor and you purchase a home through one of these various exemptions, within 7 years, 10 years in some instances, you need to list it for sale for an owner occupant, for a home buyer. So that is basically how it's laid out. There's been a lot of concern from both firms and some nonprofits working in the build to rent space in particular, who build to rent is one of the exempted pathways. It's supposed to be exempted from the ban, but it is not exempted from the 7-year requirement. And the fear is that a 7-year period is incompatible with the way that you would get financing to build a build to rent community. And so the fear is that it will effectively chill investment in build to rent, which has become an important source of supply in some parts of the country. What is exempted from the 7-year ban is if you are offering a home ownership program. So if you offer to the tenant to report their positive rental payments to credit reporting agencies, and you agree to, when you're ready to sell, you offer that tenant the opportunity to purchase, you should be able to be exempt from that 7-year period. And so none of this is cut and dry, but it has caused a flurry of opposition. Most folks are still supportive of the overall bill, but there's a lot of consternation about the structure of this particular section. Does that get at your question, Brenda? Okay. Any other questions on that or other parts of the legislation? Okay, we got another one here. Okay. All right, let's see if there's any others. Last call for questions. Okay, so I'm going to start closing us out, but if you have a last question, we'll take one more. Appreciate everybody, Chloe and Grant and Dan and Emmy, for sharing about what's going on in this landmark housing bill, and also for your work throughout to help inform the pieces of it by bringing in the experience that petitioners have in communities. So thank you for all of the work and for being here with us. For folks on the line, I think stay tuned, but I do think there is an opportunity to, educate your members about the ways, about the work, about the great work that you do, and about some of your constraints and the ways in which some of the elements from this bill might help, because we are so close to the finish line on this bill. And again, this is not a panacea. This is a down payment on a broader solution, but we need, as a country, we need to move forward together on something to move the needle forward on housing, given the level of stress so many families are feeling across the country. So now is a good time for folks to be reminded of the gravity of the situation. So appreciate your partnership. Please don't hesitate to reach out if you have additional questions. And with that, Jordan, anything any sort of official master of ceremonies things you need to do?
I don't think so. That was a great spot to end
Okay.
it, Sarah. So
Okay.
again, for everybody, this video will be found on NCST's website. You'll be able to find those along with all of our other community impact briefing calls. As Sarah mentioned, please feel free to reach out to us if you have any questions for the panelists or for NCST as a whole. info@ncst.org. Pretty straightforward there. Reach out there. But no, thank you to all of our panelists, Chloe, Dan, Grant, Sarah, and Emmy. Thank you as well. And hope everybody has a good rest of your Wednesday and a good rest of your week.
And thanks for being with us.
Thank
Thanks.
you.
Bye.
Thanks all.